This is Gerardo Del Real with Resource Stock Digest. Joining me today is the CEO of Nomad Royalty Company, Mr. Vincent Metcalfe. Vincent, how are you today?
Very good. Thank you very much. Very happy with the recent release we just printed last night. So more than happy to talk about it on the show.
I believe that this is your first New Orleans investment conference for Nomad, correct? Being that you just went public recently, I'm attending. Mr. Nick Hodge, co-owner of this site, is attending. I believe you're there as well.
Yeah, it's the first time for Nomad. We've been there in the past. It's always been a really good conference to attend, and looking forward to see what comes out of it. Yeah.
Well, your news yesterday then was pretty timely. You announced 2020 third quarter gold and silver deliveries. Can you give us a brief breakdown? Pretty impressive numbers, a heck of a way to start, out the gate the way that you've intended to, which was going to be cash flow positive, accretive transactions, and a lot in the pipeline from what I understand.
Yeah, for sure. I mean, we came out with our Q3 deliveries, which were really, I would say impressive from where we stand. The assets are doing very, very well. If you look at just the royalty and stream deliveries from the gold assets, they're up 30% quarter over quarter. If you look at the silver, it's pretty much, very stable from last quarter. And, in terms of what it means in terms of, generating revenue, we've generated 7.6 million last quarter, which is, this quarter, which is pretty much in line with last quarter. So even though, we went through a pandemic and so on, the revenue is right on point. And we're probably looking at revenues north of $20 million so far for 2020. So very much, in line with our expectations, even though we're going through a crisis. And what's most important is that if you look at the portfolio and how it's, if things go as planned, 2021 will be a very, very good year for us.
Yeah, my brain went to a quick marketing headline for Nomad: pandemic proof with a dividend.
Yeah, I mean that's the other thing that we put forward since our last conversation. We announced the dividend. Right now our dividend's yielding 1.5%, which is more than double our peers in the royalty sector. So obviously a very good time for investors to come into the stock. To get that time for return on the dividend doesn't happen very often. So to that end, I mean, it's 1.5% at the moment, but most importantly, that's just a starting point for us. And as the portfolio matures next year, we should see increases on that front.
Let's talk about the portfolio for people that are new to the Nomad story. We're kicking the tires. We're here virtually at the New Orleans Investment Conference. I can tell already by the dialogue, there's a lot of first-time people in the space that are looking around for opportunities. As you and I both know, this space is inherently risky, but the beautiful thing about a company like Nomad is that you mitigate so much of that risk. Can you provide an overview of the company, the portfolio, and just how you look to take advantage of this bullish cycle while mitigating as much risk as possible?
Yeah, for us, it's adding assets. We started this business with 9 assets. 4 months in now, we're up to 12 assets, and it's really adding assets globally and diversifying that risk. And as you said, mitigating all these risks that are inherent in the mining space. And what that means, it means adding other cash flowing royalties and streams, whether they're in North America, Latin America, other parts of the world. And really, we strongly believe that as we keep building this portfolio, a bit like a portfolio manager does when they're building their own portfolios, limiting asset concentration and limiting too much concentration in a specific jurisdiction. And really what that provides to the investor is, full exposure to the commodity price. And that's what, at the end of the day, investors are looking for. They're looking for exposure for gold, for silver, and that's what we provide. What we limit is exposure to the risk, which are capital structure, in terms of operating costs, in terms of, capital development costs, which that's usually where you see inflated or I would say misses as these operations go forward and, go through the various cycles they go through. But most importantly, what in this type of environment where we're seeing increased gold price and increased silver price, is that we're seeing more and more money thrown at these assets. And what that means is we're seeing more ounces become economical. We're seeing more drilling on these projects, and that's what an investor that invests in a royalty and streaming company also gets the benefit from.
You and the team have a deep network of contacts. You've been very, very vocal, as has everyone at Nomad, about the fact that you plan on being aggressive through accretive transactions. That can be M&A, that can be partnerships, a number of approaches. Can you walk me through what the next several months look like and just what that business model looks like in 2021 as you work through the rest of the year?
Yeah, no, absolutely. When we created Nomad, one of the main things for us as a management team is we wanted to be owners first. And that's what, the way we structured this company is. Joseph, myself, and Elif are some of the largest single shareholders in the business, and that will stay that way. So what that means is when we're looking to grow this business, we're thinking like shareholders first and owners first, which I think for any investors coming alongside us, they're always going to have that reassurance that we think like shareholders, and we want to make sure that per share metrics are put forward when we're doing transactions. And really, what that means is staying a sub $1 billion company at the moment is not something we want. I mean, we're not in this business to collect a paycheck every couple of weeks. The main thing for us is to make sure we build a platform which drives value on the long-term front. And when you look at the royalty and streaming sector, the larger companies and the larger mid-caps all benefit from much higher multiples because they have that size, because they have that diversification, because they have that liquidity in the stock. So our ultimate goal for Nomad is to get this platform, whether we are the ones running the company, whether we get acquired, whether we acquire or we merge with a peer, is to get this platform to a size which is probably between 3 and 5 billion over the next, I'm going to say, 2 to 3 years. And I believe that if we reach that, we're definitely going to get a secondary rating down the road. I think we're going to be working right now for the next 12 months or so to get that first re-rating. But I think that's where, when we think like shareholders, we know exactly what the plan is. And right now it's showing the market and the investors what's the portfolio within the next 12 months. People are going to see the deliveries every quarter. They're going to see the assets do well. And then with the bigger plan, over the next 2 to 3 years, is building that larger platform. So if we always keep our focus on those two objectives, I think we're definitely going to see higher value and higher per share value for Nomad investors in the future.
I was an early investor in Nomad, and a part of what attracted me to the company along with the team was the fact that the G&A, the burn rate was there was a focus there to keep that to a minimal. You wanted to make sure that the cash that you brought into the company went into accretive assets and getting to that, $1 billion plus market cap valuation. I'd like for you to speak to that because not enough companies focus on that, especially initially.
Yeah, no, exactly. That goes back to what I said earlier about creating a business in which we're actually owners first. And when you're an owner and you realize where these costs are going, you want to minimize what we don't think necessarily adds to the value of the company. And we want to maximize efficiency. So the three of us executives this year are actually not taking a cash salary. We're taking shares on a quarterly basis. So whether the share price does, we get a proportional amount of shares every quarter. And really that, again, is to make sure that we are as fully, aligned with the investors. And it also means we're taking decisions in terms of, we decided not to have an offshore subsidiary for this company, which is sometimes typical for royalty companies. But that, minimizes G&A to basically to 2 times versus our peers. And it's also, not necessarily focusing too much on salaries, more on actual creating value on a per share metric. That's, I think it's the mentality that we have. It's the vision that we put forward always. And again, just having a focus on making sure that we deliver value to our shareholders.
Well said. Vincent, I know you have lots to get to, so I'll let you get to it. Thanks so much for your time today.
Thank you very much, and looking forward to talking to people hopefully during the New Orleans conference.
Excellent. Take care.
Thank you.